Should you use a bank, a credit union, or a mortgage broker if you're buying a home in the Tampa Bay area? That one decision can shape your rate, it can shape your closing costs, and it can even determine whether the loan even makes it to closing. And here's the problem. Almost everyone who answers that question for you is trying to sell you one of the three options. So let me do something a little different. I'm a mortgage broker, which means you'd expect me to stand here and tell you that a broker is always the answer. Well, I'm not going to do that, because the honest truth is there are real situations where a bank or a credit union is the smarter move for you. And by the end of this video, you are going to know exactly which one fits your situation. I'll also give you the one question that pretty much tells you almost instantly which option makes sense for you. And I'll show you the single most common mistakes I watch Tampa homebuyers make before they ever pick a lender. So stick with me here. First off, these three aren't really competing on the same thing. A bank, a credit union, and a broker are good at three different jobs. When you treat them like they're all just kind of places to get a loan, you end up picking the wrong one. So let's break down what each one is actually built for. The good, the bad, and the ugly. Start with the bank. A bank lends you its own money. And the biggest thing that a bank gives you is simplicity and a place that you can actually walk into physically. You can stroll into a branch, you can make your payment in person or online. If something goes sideways, there's a building with your name on the account. For a lot of people, that peace of mind is worth a lot. Banks can also be surprisingly strong on a couple of specific things: jumbo loans and home equity lines of credits, aka HELOCs. A bank only carries its own products, which usually means fewer programs. And fewer programs means two things. It can be harder for you to qualify because if you don't fit their box, there's no plan B. And on the everyday loans that most buyers actually use, like FHA, USDA, and conventional, a bank often has a harder time coming back with a truly competitive rate. So the lesson here is simple. If simplicity and a branch that you can walk into matter most to you, or if you're shopping for a jumbo loan or a HELOC, a bank deserves a real look. Just know that the menu is narrow. Now, let's go to credit unions. A credit union is owned by its members. You're not just a customer, you're literally a part owner. And in a lot of ways, a credit union feels like a bank. You've got a branch, you've got that physical place to go to, but there are a few areas where a credit union genuinely pulls ahead. They can be a little bit better priced on conventional loans sometimes. And this is the big one almost nobody mentions. Credit unions are usually where you go for a land loan. If you're buying a piece of land, most lenders won't even touch it. Credit unions will though. They also tend to be excellent on construction to perm loans. That's the kind of the loan you use when you build a home. And they're really great on HELOCs as well. And one more quiet advantage. Credit unions typically don't sell your servicing. What that means is the place you send your payment to usually stays exactly the same for the life of the loan. So instead of getting handed off to another company months later, you stay with the same one. But here's the catch. On VA, USDA, and FHA loans, credit unions usually aren't very competitive on rate. So if you're using one of those, and a lot of Tampa buyers are, a credit union may not be your best price. So here's the lesson. If you want a physical location, or you need a land loan, or a construction loan, or a HELOC, get a credit union quote. It won't hurt you. And on those, they are really tough to beat. All right, now the one I'm supposed to be very biased about, the broker. Here's the honest version of what a broker is. A mortgage broker doesn't lend their own money. A broker shops your one loan file across a whole network of wholesale lender and brings back options. So instead of one shelf, you're looking at many shelves at once. And that's exactly why on most loans, a broker tends to come back with the lowest interest rate and the lowest closing costs as well. They have more shelves, and that means there's more competition for your loan. It's also why a broker can handle crazy scenarios that nobody else can, like self-employed borrowers, newer businesses, commission income, the complicated files a single bank typically will just say no to. But an honest take here. So here are the real downsides. A broker is usually a smaller shop. That means there's no big branch to walk into. And you can't link the loan to your existing bank accounts the way you can with a bank. So if having a physical location matters to you and having the ability to merge all of your accounts together is important, a broker probably isn't your best fit. But here's the flip side of being small though. A broker is usually a local small business, which means the owner has real skin in the game to make sure your experience is good. With a giant lender, you could end up feeling like a number. With a really good broker, you're a client, and their reputation in the town is their whole business. Now, let me kill the obvious objection, because I know you're probably thinking it. If the broker shops it, then who's paying the broker? Well, that's a really good question. And here's the answer. A broker gets compensated on the loan, and by law, that compensation has to be disclosed to you in writing. It's not a hidden fee buried in your rate that no one's going to explain until 2 days before closing. You should be able to ask any broker directly how they get paid and get a clear answer. And if you can't, that's your sign to walk away. So let's break it all down. A bank is simplicity, a branch you could walk into, and strong jumbo and HELOC options. A credit union is that same physical convenience, plus the place to go for land loans, construction loans, and HELOCs. A broker is the best for the strongest rates, the lowest closing costs, and the flexibility to handle the loans that nobody else will, just without a branch. So none of those is really the best. The best one is the one that matches what matters most to you. Which brings me to the question I promised you earlier. Ask yourself this: what matters more to me? The lowest rate and the most flexibility, or simplicity and a place I can walk into? If it's rate and flexibility, I'd start with a broker. If it's simplicity in a physical location, start with a bank or a credit union. And there's one shortcut that will override all of it. If you need a land loan or a construction loan, go right to a local credit union. That's what they do best. And as promised earlier, here's the mistake I see buyers make all the time. Buyers pick the lender first and check their qualifications second. They fall in love with a name or a rate they saw in an ad, and they only later find out that lender can't actually do their loan. Do it the other way around. Get a real look on your own situation first, with your income, your credit, your financial goals, and then choose the door that fits. The lender should match you. You shouldn't have to comfort yourself to match the lender. So real quick recap, because this is the part that saves you money and stress. 3 doors: bank for simplicity and relationship, credit union for service and fees, broker for access when your file is complex and better interest rates. Sort yourself with one question: simple income or complicated income? And never pick the lender before you understand your own loan. If you've got value out of this, I want you to do me a favor and subscribe. I put out honest, no panic breakdowns like this for Tampa buyers every single week. And the next ones build on this. And look, if you're sitting there thinking, well, my situation isn't simple and I actually want someone to look at it before I go knocking on the wrong door, well, that's the easiest problem to fix. Book a free strategy call with me. The link is right below this video. We're going to look at your income, your goals, and all of your options, and I'll tell you honestly which door is yours, even if it's not mine.